Welcome back to Capital Mindset, everyone. Today we're going to be talking about Alphabet. Now, this is a battleground stock. I'm really excited to cover this with you guys here today. So, Alphabet Class A, this is the voting rights. And just a fun fact before we begin, Class A used to actually trade at a premium to Class C that is also traded, ticker symbol GOOG, back in the day. But since the buyback program, now Class A actually trades at a discount to Class C because most of the buyback is actually geared towards Class C. So, for the longest time, again, this is a back in my day kind of thing. Class A was actually the quote unquote more expensive stock. So now you can actually buy Class A at a slight discount, or actually you could see right there $166 for the Class C. So it's about $1 in difference, nothing to really care for about. Now let's take a look at some of the parts that I wanted to discuss. So what's going on with Alphabet? What's the issue? Why are some people bearish? Why are some people saying the bears are dramatizing the concerns? We're going to go over all of that and also go over evaluation towards the end and figure out whether or not Google is an interesting opportunity here or it's a value trap. And I hope to cover, again, both sides. I'm going to do my best. You let me know down in the comment section below if you guys are bullish Google, bearish Google, or just neutral, which is a perfectly fair point to have, and you're just going to watch and see what happens, but you're investing in other things. You let me know. All right, so let's first bird's eye view of the business. Let's see each of the points or breakdowns. This is actually from one of the sponsors of the channel, Fiscal AI, and you can see this chart that we have up here is of the revenue breakdown of each segment, and we can see at the largest portion sits Google search and other revenue. So this is the part where everyone's fighting about whether or not Google has a bright future or its glory days are behind it. Now they have a wonderful assets in YouTube, cloud, everything else, Android. There's no debating that. Now the question is what's going to happen to search? And I think that's going to sort of shape the discussion here on out. Again, this is something that if you didn't know this was an issue, you've been living under a rock. But let's break down, and I'm going to show you some of the research points that we have to kind of get a better picture of what's happening to search underneath it all. So undisputably, for the past decade or so, search has been the crown jewel of Alphabet. So much so, it's gotten them in a little bit of trouble. They're being sued for being a monopoly. Now, let's pause there for a moment. So how can you be a monopoly and at the same time be under threat of said business? I know it's a kind of a funny position to be in, but nonetheless, Google is in that. And so that might actually shape the arguments that they're having in the courts, which it is. And they also have argued for a while that they are not a search monopoly. So for example, Amazon's sort of a search query that you're doing when you're trying to search for a product, Instagram, TikTok, etc. So all of these other search alternatives exist out there. They're just not in the same kind of search that you think about when you think maybe Bing versus Google, right? So it's a little bit more out of the box thinking there, but in reality, they have a point, right? And so now the question is, all these LLMs have introduce a new way to interact with information. One way that you can ask questions, ask a follow-up question, ask for maybe images. It's a whole new different way of interacting with the internet. And of course, Alphabet has their own AI tools that we'll actually get into and see a little bit of a comparison. So let's actually take a look, for example, at this data point, and we're going to look at the daily active users for Alphabet. So you can see there it's up and to the right, actually growing 7% year over year. This is provided by Bank of America. And then we can see, again, another way of looking at it, Google daily active users up 7% year over year versus 6% year over year in March. Now, what are we going to, let's say, emphasize, or let's say what the bears would counter with is the following, because I want to show you guys both sides of the argument. And now this data point is a bit more concerning, right? So what we see at the top here is the ChatGPT users growing significantly. Now what do you see there is Gemini. So this is breaking out basically by AI offering, by the apps, and Gemini only has about 22 million monthly active users. And you can see there it's measured in millions. And then down at the bottom, well, what is that? That is Google's totality versus ChatGPT. So the totality of Google is still huge, right? And then you can see that ChatGPT's visits were roughly 7% of Google. So Google is still massive, by far and away, massive. Now at the other products there, you can see ChatGPT, Gemini, and Perplexity. So they still split off Google from the rest of it. And so we have this, classical innovator's dilemma. Does Gemini start to cannibalize Google, or Google makes Gemini so much better that people go from Google to Gemini? We still don't quite know how well to monetize AI search. So when people are asking questions to the LLM, how do you monetize that besides a subscription? Because the subscription model exists, and I can give you guys a little bit of a breakdown of something I've theorized with the members, as far as like what all of this might look like. And it goes to something like this. So right now, I believe we are in this golden age where all of these free products exist, and you have access to more information than any human has ever had access to at ease. Now, you have to be careful with that because a lot of the information could be faulty, and if you don't know what it is you're looking for, you may end up with hallucination. Now, a lot of these have gotten a lot better. However, there are still mistakes that can be made. Now, do I believe these tools are improvements? Absolutely. I think that if the younger me had these, the learning experience would have been a lot better. Of course, there's a lot of potential for abuse here, by which people who are students might unfortunately be crutched by this to the point where they might get lazier, in my opinion. But as far as like those who end up using it for good, I think it's going to accelerate productivity. It's going to accelerate the pace at which we learn new things. And overall, it's a positive. Now, again, going back to that monetization thing. So right now you can pay $20 a month and you can get access to the pro versions of GPT, Gemini, Perplexity, etc. And then Grok you have to pay for using X. The cost is relatively low for what you get, in my opinion. However, what is not free, so to speak, is the creator economy that exists out there, not so much in the form of YouTube, but also maybe somewhat impactful there, but it's in the form of media. So for example, a journalist is compensated a salary and they report on the news. And then so you can actually scrape information with these LLMs and get the information without ever visiting the site. And there's already lawsuits, by the way, in the courts about this. So how I kind of view the future of what this is going to look like is it's going to probably close up the internet a lot more, or it's going to create a system where the LLMs are going to be financially liable or responsible for utilizing certain information, and then the models are just going to cost a lot more for the common person to use. And then it's going to be more so you have to pay for the higher quality ones versus like what you're experiencing right now, which is the higher quality ones are quite readily accessible. So this is one possible outcome of that future, which I think is quite plausible, to be honest. And what we see is the companies with the largest repositories might stand to benefit the most. What do I mean by that? So Google, when you're watching this video on YouTube, Google technically owns part of this video with me. So I made this video. You're listening to this content. You're listening to my voice, and we're sharing information, right? I'm sharing this with you, and right now it's creating a transcript. Google technically has full access to this, and so it can train itself on this model. How do you think they came out with VO3 at the pace that they did and the quality they did, where it was somewhat of a leapfrog versus the competition? They have YouTube to train all of these models on. So by that nature, Google is one of the greatest beneficiaries of that outcome because they have such a massive repository. And a lot of other companies may end up, which they're already doing, like, for example, Reddit, that's one way they monetize, selling the information to these LLMs so that they can train it and make it a lot better. So that's already happening. I think that's going to accelerate, but the way things are going to look like is, unfortunately, these costs may end up going up for the consumer just because to an extent, it's not fair that a journalist out there, you know how I always criticize journalists, by the way, a journalist out there is working essentially for free while my LLM just scrapes all of the work that they put into. So that's one issue that I see in the future occurring. So let's go over some of the let's actually take a look at the press release. So you can kind of see the breakdown here. And you can see Google search again, once again, that this is the line share, but what do you notice there? It continues to grow. How is it growing? Okay, so that's the question. How is it growing? So the bulls will say it's growing because it's not dying. People are still utilizing search. Now, what will the bears say? So the bears or the doubters will say, well, they're probably growing their search business because they're showing more ads or they're increasing the price of their ads. Now, I spoke with some members in the club, because the wonderful thing about the Capital Mindset Club is people from all these different backgrounds, et cetera, and different expertise. And I reached out throughout the network to try to find people who are more in tune with advertising, in the advertising business. And they spoke to their contacts to see how Google Ads work. So what I kind of got out of all of it is it's yes and no, as far as like the pricing is being the primary reason for it to go up, but also the efficiencies are also improving. So one of the things that Meta had experienced over the past couple of years is implementing quote unquote AI to improve their targeting. And I say quote unquote AI because AI is so much of a buzzword these days that there's maybe the more practical, legitimate conversation we can have around AI, and then there's the LLMs. So Meta has improved their targeting algorithm, or AI, whatever you want to call it. They call it as part of like their AI business. And their advertisements have definitely shown improvement according to advertisers. And I think I see it as a consumer, the relevancy of ads has also improved. Well, Alphabet has also, you could make that argument, room to improve to kind of reach a meta level status as far as targeting goes. So that's one way that they're able to monetize that further. Now, another way is, of course, just increasing that frequency and increasing that price. Now, the YouTube ads or YouTube ad content, you can see there, it's growing, but arguably it's growing at a slower pace than what some people might expect. And I continue to believe that YouTube is an under monetized platform. There's a lot of ways they can continue to increase that. And that's just YouTube ads. It's not from the subscriptions that is going to level off in the Google subscriptions and platforms and devices, et cetera. So YouTube subscriptions, YouTube Premium, when you're watching this, a YouTube Premium subscriber is oftentimes more valuable than the ad watcher. And there's still more ways that, again, they can push for that monetization by figuring out ways to get around ad blocks, et cetera. But one way is that, and then kind of funneling people over to that premium YouTube. Google Cloud is probably the most exciting part of the business. Margins are continuing to expand, operating margins, that being said, and it has inflected on profitability not too long ago. We'll actually take a look at that. So what you have here is the operating income of just the Google Cloud segment. And what you can see here is for a while now, it was negative. And I'm showing you the LTM. Let's actually switch over to the annual, and you can take a look at that. So annually, you can see all the way back to 2018, they were losing money on cloud and only just now have inflected on profitability. You're going to start to see this expand. Now, hey, let's always talk about the bearish arguments, because I want to be cover all sides as much as possible. So one of the arguments here, because when we're looking at the profitability, not the cash flow, but the profitability of the cloud segment of this hyperscaler, the change in accounting rules for how they depreciate the equipment, they've extended the life of the equipment on paper. And so what that essentially allows them to do, and quite literally, what essentially allows them to do is lower the amount of depreciation they're realizing on an annual basis, which boosts profits. And so what you start to see is the margins start to improve. Now, you as an investor have to say to yourself, is this legitimate, or is this just kind of moving some numbers around to make yourself look a little bit better? I would argue it's not them manipulating the numbers. Legitimately, there's a case to extend the life of the product, just because the sheer amount of demand that they're seeing for compute is in such that older models or older machines are going to need to get more use out of them in order to satisfy that demand. It's a luxury to be able to just throw away the older ones and get the newer ones constantly. So while the spend is there and they're constantly growing their network at this point, because the amount of demand for compute is so vast, and you can see that in their backlog, we're starting to see let's say the extremes of this forward. Now, each one of the hyperscalers has their own, let's call it, backlog realization. And so Alphabet, you can sort of look at the backlog and see for yourself how quickly it is that they're able to convert that backlog into actual sales. Quickly going over to their 10Q, you can see exactly where you can find the backlog. And it says, as of March 31st, 2025, we had $92.4 billion of remaining performance obligation, revenue backlog, primarily related to Google Cloud. Revenue backlog represents commitments to customer contracts of future services that have not yet been recognized as revenue. We expect to recognize approximately 55% of the revenue backlog over the next 24 months. Okay, so there you have your figure. You can sort of figure out from this how much Google Cloud is going to grow. And that's using that figure right there, the 55% over the next 24 months, not, so that's 2 years. In 2 years, they will recognize about 55% of that. So this is sort of to show you a little taste of how much demand there is. And of course, Amazon has their own Amazon Web Services, Microsoft Azure, etc., Oracle. They all have their own backlogs. They all have their own estimates of how quickly they can match that demand. And there you can gauge and kind of backtrack how much they're going to be able to grow Google Cloud by, or whatever cloud you're looking at. So let's go right into the evaluation and figure out for ourselves, like, what is the potential value? And so I'm going to go ahead and show you that from my own sheet, that this is something I share with a lot with the club members in Capital Mindset. So when we go over a stock, I like to share the valuation, at least what I think about the stock. And this is sort of like a bird's eye view. So I shared this whole 2-page sheet thing. So anyways, with Alphabet, right here, I'm kind of just trying to do a scenario analysis with the stock and figuring out what sort of growth rates I can kind of expect, and how does that match to the price. So you can see that for the middle of the range, we were actually just at that price point back in April, where you got a fairly attractive entry point. Now, right here, you can still probably expect, if you can think they're going to hit about 17.5% earnings growth CAGR, that's about the sweet spot, what you'd be wanting to see if you're buying it at today's level. Now, that more aggressive standpoint is going to be about that at that 20, and I think that there's a very low probability of that occurring. In fact, actually, the weightings are a bit more on the conservative side, because of what you see is I actually leaned it a little bit to the reverse. I weighted higher to the lower growth standpoint than to the higher growth and even the middle one. So this is a more conservative kind of just like throw in estimate to that, but I wouldn't put too much weighting to the weightings, pun intended. Now, just kind of thinking about where we are now, I think that if, and this is the key word, if we do not see deterioration to Google search, then getting that 17.5% earnings growth is possible. And by the way, this is for getting what I believe is an attractive above market rate of return, and so adjusting for risks, etc. That's what that assumes. Okay, so it's not just like, oh, getting at market rate of return, because that's not what I'm looking for when I'm making an investment. I'm trying to find things that are going to be giving me an above adjusted market rate of return. Now, looking down at even the 10%. So what happens in that scenario? So that scenario does not really imply too much deterioration in Google search. The trap, where we're answering the question, I'm providing to you my opinion, the final conclusion is, the trap is quite literally, does Google search go like this? Poof. If that's the case, then yes. The answer is obviously yes. This is a trap. If it's not a trap, is it the greatest value on the market right now? I would argue no. Now, I don't think any bull would say that either. I don't think any bull says confidently that Google is the greatest value on the market. Is it a good value? I would argue yes. The answer is yes. It is a good value here today if Google search is not disrupted to the point where you start to see massive deterioration. If you see a slow bleed, is it a good value here? I would probably stand to reason you want to wait for maybe the 140s again. So if you got an entry there, good for you. If you have a entry below that, even better for you. I think that at that price point, it makes sense, or it's going to be a little bit more attractive considering these risks, because I think the probability that Google search grows at an elevated pace in the future is very, very, very low. If anything, my expectation for Alphabet on a go forward basis is slow growth for search to flattening out, and then in a bear case scenario, by which you want to be at least prepared for and watching out for strong deterioration to a price point where the market will adjust it, and then you can look at it again from the point of view of like the other products that they have, cloud, YouTube, Waymo, which is this project that they have where there's a lot of excitement around. But search being such a strong portion of the profits, right? I want to just emphasize that once more, that if search deteriorates rapidly, it will look like a trap. Now, because I've heard this argument too, what do the other things have as far as value in the sum of the parts. Some argue that the sum of the value or the sum of the parts valuation for all the other products is greater than the price today. Now, I will sympathize with that, although I find that argument to be more on the weak side. I don't particularly like a thesis that relies on some of the parts. I tend to find those theses a bit rushed, or a bit like a form of cope, you might say. But I can see that. I can see if you're assigning really high multiples to some of these businesses, sure. Now, one would argue, I think fairly so, that search subsidizes a lot of those other projects in such that in order to get those projects up and running and do a lot of the necessary CapEx, you need the cash cow. So again, just trying to balance it out, the bears would argue, if the cash cow goes away, what happens to the ability to spend the necessary CapEx on those other businesses? Well, it's gone now. So yeah. For full disclosure, I do have a position in Alphabet. I want to, state that. And so it's not my largest conviction, but it is a position I'm comfortable with having. I've had it for quite some time now. But is it the greatest value in the market? My personal opinion is I don't think so. But I would like to hear your opinion down in the comment section below. You guys let me know, is this the greatest value in the market? Is this, just an interesting opportunity? Would you like it lower? Are you buying now? And yeah, let me know if you like this video, and please comment, share, subscribe. Check out in the description below access to the Capital Mindset Club, where I share my portfolio updates and myself and the other analysts as well. And we provide pitches and also weekly private content. With that being said, thank you guys so much for joining me today, and I will be seeing you guys on the next video. Bye.